Well, thank you very much, Raleigh. Thank you very much for that kind introduction. Thanks to everyone at Trading Pub, to Raleigh and to Yana as well. And also, thank you all for attending today, taking time out of your busy Thursday to come and hear this presentation. As Raleigh stated, yes, we're going to be talking about the 3 key elements of a winning strategy. These are techniques and tips that I've accumulated in my nearly 37 or 38 years, I should say, because we just changed the year now, so it's actually 38 years now of trading the markets. Once again, I am the president and founder of Specialist Trading, and for those of you who are not familiar with my website, we are first and foremost an educational company. We're all about providing our members and our students all of the different techniques that I've accumulated in my career so that you can ultimately take charge of your own trading. All right, we want to give you all this information so that you can ultimately make your own decisions, become a part of the trading process. And that's how we feel will really ultimately get you on that road to consistency. As Raleigh stated, I started out on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. I traded through the crash of 1987. I traded through the great bull market that followed after that. I've seen and traded through just about every market environment imaginable, from straight up to straight down markets, through choppy markets and tremendously volatile markets. And so I'm really qualified to teach you exactly what it takes to be consistent. So once again, we are an educational company, and I'm going to share this with you today. You'll see how much attention we really devote to details so that we can really educate our students. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these patterns in the 3 key elements, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. As you're taking a moment to view our disclaimer, I would also like to take this time just to invite each and every one of you to follow us on Twitter. This is our handle right there, abbreviation for Specialist Trading. You might want to write that down. That is at SPCLSTTRADG. I believe Yana may have posted it right there. Thank you, Yana. And I would love for you to follow us, because every day I post some great and free information, anywhere from daily financial wisdom to actual signals that we're currently in. In fact, just about 3 days ago, we posted a great signal for going short the markets, starting with the E-mini market. So we had 3 of our proprietary strategies generated sell signals. So we posted that we were actually in the trade already. We can't give away the information of where to enter, but we posted all this information, and right now, if you were being a more aggressive trader, you would actually still be in the trade, and you would have close to 50-point gain. That's roughly $2,500 per contract. So this is what we provide for our students, and once again, we let you know right off the bat if we are in an actual signal from any one of our strategies. So feel free to follow us on Twitter. Okay, now before we begin, I just want to go over a little bit of the philosophy about specialist trading, because as I stated, we are an educational company, and the reason why I focus so much on education is because that's what turned my trading around. I know a lot of you are probably thinking, well, you know, Steve started on the floor of the exchange, he had all this inside information, he was privy to all these orders and everything, but believe it or not, my first year or two as a specialist, I really couldn't make a dime. In fact, I was really wondering if I was going to be on the floor much longer, because I was doing everything I had been taught to do. I was reading all the books, going to all the seminars. I was following every indicator you could think of. I was listening to all of the trading gurus. We didn't have trading rooms or chat rooms at that time, but we had newsletters, and I was following everything. And I would have maybe about 3 or 4 great trades where everything worked perfectly. And then it was the 5th trade usually where I'd give everything back. And I know that probably sounds familiar to a lot of traders. And it's, I would say, the majority of traders go through the same type of process. It's extremely discouraging and very depressing, because you put so much hard work into trying to learn how to trade the markets, and you believe you're doing everything correctly, but it just doesn't seem to get you anywhere. So I was lucky enough to find some mentors on the floor. These were specialists as well who had been trading about 40 years each. And they turned my trading around by simply telling me that letting go of conventional wisdom is what will get me on that road to consistency. It's not about hitting home runs, but it's more about hitting singles and having 2 steps forward, 1 step back. And so what they did was they shared with me how to keep my trading as simple as possible, with a few patterns, a few tools, and to basically just listen to the market. Forget about listening to outside sources such as trading gurus or news on TV or indicators, a ton of indicators. Just keep things as basic as possible and learn how to listen to the market, and that is what will eventually get you onto that road to consistency. So this is what we try to instill in all of our members, because this is what was able to turn my trading around, and now I've been able to be trading for roughly 38 years. So we're not about hitting home runs. I know a lot of educators promise thousands and thousands of % a year, if not per month. We don't do that at Specialist Trading. What we do is we educate you, and hopefully we can fine-tune our strategies and our formats to meet your needs so that you can get onto that road to consistency, which is 2 steps forward, 1 step back. And the beauty of consistency and successful trading is that you're able to trade 10, 20, 30 years down the road. We're not just looking to make hundreds of thousands of dollars or millions of dollars in a relatively short time, because you can just as easily lose that. In fact, I know many traders who I used to trade with on the trading floor are no longer trading. Even though they made hundreds of thousands of dollars, some even made millions, they're no longer trading because they've given it all back. So there's really no consistency in hitting home runs. It's all about, once again, singles. So this is what we try to instill in you. Once again, we provide you all the information, all the strategies, but it's more about teaching you how to trade. We don't want to trade for you, we want to teach you. So my goal is to teach you how to trade with the specialist edge, the same edge that was able to turn my way of trading around. All right, so that's just a little bit of philosophy about specialist trading. Now here's what you're going to learn today, since this is, once again, an educational format here. I'm going to give you the 3 keys here, and the first key is how to trade in sync with the market. And this is whatever market you're trading. It doesn't matter if you're trading the 5-minute chart of the E-mini, or if you're trading a weekly chart of the currency pairs, or a daily chart of stocks. It does not matter. I'm going to show you a great technique for being in sync with the trend. Now, key number 2 is, once we found the trend, we're going to look for a specific price bar pattern. This pattern is something that you should be able to apply to any strategy, any technique you're currently trading, whether you go long or short, whether you trade tick charts, or whether you trade weekly bars, okay? And then lastly, key number 3 is a great entry technique. It's designed to fine-tune your trading, all right? It's not designed to get you in at the top and get you out at the bottom, but it's designed to fine-tune your trading so that you get in the trade once it starts going in your direction. And I'll show you how to implement all of these so you can start using them as early as tomorrow if you'd like, okay? So these, once again, we give you a lot of great free information that you can apply to your own trading, whether you want to trade with one of our strategies or whether you want to apply it to your strategies as well. Now, the last thing I wanted to state before we begin, I know a lot of you may have a lot of questions or things may not seem clear. Most of my information is really or fairly simple to understand. You should be able to understand it, but if you do have a question, I'd love to answer it, but please wait till the end of the class, and I promise I'll get to every one of your questions, okay? So kindly just remember it and keep it to yourself, and then I promise I'll get to the questions at the end. All right, so why don't we begin? Let's start out by looking at buys, okay? Let's say we're a buyer of the market, and I'm going to start out by showing you some generic charts and some older charts just for educational purposes, but then I'll show you charts that are as recent as yesterday, all right? All right, so let's say you're a buyer of the market, and key number 1 is, and I'm sure you've all seen this before, but you must trade in sync with the trend, okay? This is trading 101. I know you've all heard this before. This is probably the first thing you learned about trading. But you have to ask yourself, if this is the first thing that everybody learns, why do 80% of most traders fail? If you know that you must be in sync with the trend, why are most traders failing? Well, we feel at Specialist Trading it's because there are 1,000,001 ways in which to discern what the trend is. And most of them are faulty. They're too complicated. They require looking at 2 different time frames or different indicators or listening to news, and it's just too convoluted. We're going to show you what we feel is the simplest but most powerful way to find out what the overall trend is. Now, as we look at this generic chart here, someone could look here in hindsight and say, well, Steve, there actually is no trend here. If we look at this, there's no trend at all. I don't really see a trend. And, you know, we're kind of going down, and then we go back up, and then we go lower again. So from what I follow and just looking at this chart, we're in a rangy pattern, so there's no real clear-cut trend. Okay? Safe to say that? Well, that's not true, because at Specialist Trading, this is not the way we find out what a trend is. Even by looking at the small sampling of charts or bars here, it's easy to figure out what the trend is. And what we do, our technique is to simply apply a 50-period simple moving average. It does not matter if this were a 5-minute chart, once again, or it does not matter if this was a weekly or a daily chart. It does not matter what time frame, does not matter what market. And what we do is, once we've applied the 50 period, we ask ourselves, where is price, or the majority of price, in relation to this 50-period moving average. If price is above the way it is in this scenario, well, then the overall trend is up. That's it. It's that simple. Now, conversely, if prices would be below, then the overall trend would be down. So right now, we know that half our job is done. In other words, if the overall trend is up, we're not going to buck the trend. We're only going to be trading in sync with the trend. And now this means that if the majority of price is above the 50, we're not going to look for a top. We're not going to look to sell at all. The only thing we will be looking for are buy setups. Now, I know over time, you will probably, if you apply this technique, you'll see some scenarios where you go, boy, Steve, there was a great short the other day. I didn't take it because I wanted to follow your key number 1 rule, and it would have worked out great. And that's true. You will see, every once in a while, a specific scenario where it would have worked fine if you didn't apply this rule. But trust me, it's all about consistency. This is a numbers game with trading. We're trying to put the odds in our favor. And one way to put the odds extremely in your favor is to apply this simple rule with a 50-period moving average. All right? So from time to time, you will see examples where it does not, meet the requirements. But that's okay. Over time, trust me, I've been trading for 38 years using this simple technique, and over time, it's literally saved me hundreds of thousands of dollars just by being in sync. Okay, so that's technique number 1. Let's go to key number 2 now. Once that we know what the overall trend is, we want to look for a bar that closes in the top 25% of its range. Now, when we say top 25% of its range, we know a lot of people get confused at this sometimes. They think, well, Steve, are you talking about where a candlestick chart opens or closes? Are you talking about the wick? It does not matter what bar we're looking at. It doesn't matter if we're looking at a standard open, high, low, close bar, or if we're looking at a candlestick bar. Absolutely doesn't matter. We're looking at the extreme high for that day and the extreme low. In other words, the range of the very top, that could be the top of the wick, and the very bottom. All right, so what you want to do is divide that range, whatever it is, by 4 separate but equal parts. The top quarter is the top 25%. That's how simple it is. So don't get confused by thinking that, well, I trade candlesticks or I trade a different bar. It does not matter, okay? So we're looking for bar that closes in the top 25%. Why the top 25? Because we're in an overall uptrend. So we want to find a bar that closes in the top 25. So if we look at the same example again, this generic example, we see we have 3 bars here. Now we've colored them green only to show you that these close in the top 25% of their range. All right? All right, which leads us to key number 3, which is our entry technique. Now, once we've located these bars that close in the top 25%, we're going to use the confirmation technique, which is simply this. It means that you're going to buy, but on the next bar only, if price trades 1 to 5 ticks above a bar that closed in its top quarter of its range. All right? But you have to have that trade on the next bar because we're trying to catch momentum. So we can't find a bar that closes in the top 25% of its range and then wait 10 bars for it to trade above there. It has to happen on the very next bar, regardless if it's a 5-minute bar or a monthly bar. It doesn't matter. And it doesn't have to close there. All it has to do is trade intra-bar. So let me show you what we mean here. Let's go to the next slide. And we see here that we have these 3 bars, okay? We have the 3 all together, or the 3 bars that close in the 25% range. If I get my tool here, we see we have this one here, we have another one here, and another one. So what we want to do simply is buy once we trade above, as in that example right there. Once we would have traded at this level on the next bar, we would have entered. But as you can see, we never traded there. So the trade or the setup is negated. All right, you see how that works? Now, we have another scenario, the second bar right here. So this actually did trade at that level. So this means that we would have entered into this trade right there. So we have an entry at that point, and we see that for 3 to 5 bars, we went in an upward direction. So we had the odds in our favor. Now, if we look at the last setup, we see that we had to trade above there once more. But it has to be on the very next bar because we want to catch momentum. Well, we did enter on the very next bar, and this one went a little further in our direction. So do you see how now that we're in sync with the overall trend, we're looking for a clue from the market telling us that it's most likely going to be going back up higher. That's the bar that closes in the top 25%. But we don't simply buy at the market. We wait for price to trade 1 to 5 ticks above the bar that closed in the 25%. That's it. That's how simple it is. But these techniques that I'm sharing with you right now, these 3 keys are incorporated in roughly the majority of all our strategies and techniques, anywhere from 1 to all 3 of them at specialist trading. All right, let's go on to the next scenario here. Let's look at sells. Let's see if we want to sell, okay? And it's basically the same rules. We're just going to reverse everything. So key number 1 states now that we must trade in sync with the trend, and it's the same concept. As we look right here, someone looking at this chart would say, well, Steve, there's no clear-cut trend here. I'm going to stay out of the market because we're basically just going sideways. That's not true. What's the first thing we do? We apply the 50-period moving average, and we see that once we've applied it, price is below. So if the majority of price is below the 50-period, that tells us the overall trend is down. So as you can see, there actually is a trend. The overall trend is down, so this means the only thing we're going to be looking for are sell setups. We will in no way try to pick a bottom. That may work once or twice, but after time, you'll give it all back. Trust me, I'm saying this from experience. It will work when it works, but when it doesn't work, it will fail fantastically. You'll give everything back and you'll be right back where you started. So we're trying to get you on this road to consistency, and the way we do that is by giving you techniques that have consistency to them. So with this key, the overall trend is down. Now that we know that we're in a downtrend, we're now going to look for a bar that closes in the bottom 25% of its range. All right. Once again, we simply get a bar, we take the high and the low, we find out what that range is. If it were 4 points, we would simply divide it 4 separate equal parts, and the bottom 1/4%, the bottom 25% would be where we want to see the bar close. It must close within that 25%. So as we look here, now we want to find a bar that closes in the bottom 25%, and it's right here in red. So as you can see, once again, if you're having trouble with that formula or trying to figure out how that works, just take the range from the top to the bottom, not open to close. We're not concerned with that, but the very top, the very bottom, divide by 4 separate parts, and the bottom 1/4 is where you want to see the bar close. Okay? So this meets that qualification, so we have a bar that closed in the bottom 25% of its range. And so now we'll just apply our entry technique. Once again, this is called the confirmation method because we're confirming that we're going to be going lower. So what we're doing is we're going to sell, but on the next bar only, if price trades 1 to 5 ticks below the bar that closed in the bottom 25% of its range. Okay? So here's the bar that closed in the bottom 25% of its range. This means we want to sell if we trade below there, but on the next day. Now remember, it does not have to close there or lower, it just has to trade there. At some point during the next day, we want to have it trade there, okay? And as you can see, it did trade there. Even though it closed higher, it traded there, so we entered short. And look what happened. Once again, we're about putting the odds in your favor. We're not promising you great returns like this or trades that work like this each and every time, but we're just trying to instill consistency in your trading. Most traders have 3 or 4 great trades, and then the 5th trade, they give everything back. With this, we're trying to give you 2-step forward, 1-step back approach. All right, so we just share with you a lot of the basics for those techniques. Let's now look at some current examples applying these, okay? Now let's start out with stocks for all the stock traders out there. Here's a chart of AVB. This is going back to, I believe this was at the very end of, or the beginning, I should say, of 2015. And as you can see, we were headed lower, and that first bar closed in the top 25%. I'll get out my pointer here again. And we needed it to trade above on the very next bar, but it never got there. It traded just about the same height as the other bar, but never traded above. So there was no entry. And you see, this is why we say, we call it the confirmation technique, because it's got to confirm to us that it's going above the previous bar. Because if it doesn't, look what happens. Most likely it goes lower. So it never confirmed it for us, so we didn't take any type of a trade. Now as we look here, here's the next bar. And guess what? Well, this met all the requirements. We closed in the top 25% of the range. And so we needed it to trade at this green horizontal line on the next trade. It never did. So there was no trade again. And it's a good thing it didn't, because look what happened to price in the next 2 days. It really fell lower. this is the beauty of this confirmation technique. It will get you in when the market decides it wants to go in that direction. Doesn't work 100% of the time. Nothing is guaranteed in the markets, but once again, it's all about putting the odds in your favor. So we still would not have been in this trade until right here. All right, I believe this is the first week of 2015. We have another bar that closes in the top 25%, and as you can see here, it traded above there the next day. So we would have entered into the trade, and look what happened. See how we put the odds in our favor. Now, once again, someone could just as easily say, well, Steve, had I entered here just at the market, I would have purchased it a little bit higher than the next purchase. So what would have been wrong with just buying it once we have a bar close in the top 25%? Well, that's all well and good if you have the temperament to stay in the trade, because most traders, myself included, the minute you get into a trade, you want to see it just go in your direction. In fact, if you buy something, you don't want to see it go any lower than what you paid for it, correct? And if you sell something, you don't want to see it go any higher than what you sold it at. But as traders, this doesn't happen very often. As you can see here, had you purchased on this very first bar or even this one, you would have had to sit through 2 or 3 down days. And that's very difficult for most traders. Most traders would have probably thrown in the towel. They would have second-guessed their own trading method or doubted themselves or listening to the news and once again start listening to outside sources. And then they would have exited and got themselves stopped out probably a day before you're supposed to enter. So that's why we wait for confirmation. We're not concerned with any news. We're not concerned with what someone is telling us about the market. We're not concerned with a ton of tools and indicators. We're just learning to listen to the market. Look at the next example, Mattel here. We see here that once again, this was right just a couple of weeks ago. Now the price here is oscillating below and above the 50-period moving average. This is a more advanced setup. As we see here, we have a bar that closed in the bottom 25% of its range. Now, if we were to enter into this, it would be right here. So since this entry is below the 50 period, it's still valid. Even though we would like to see the majority of price bars below the 50, as long as your entry is below, it's still a valid but more advanced way to trade this technique. So if we trade there on the next day, we're going short, which we did. So you would have gone short, and then in the next week, you made 2 or 3 points to the downside. So we're trying to catch momentum. How about the Emini SP? I'll show you some different time frames, some different markets, and the Emini SP is next. If we look at a daily bar of the Emini, we see here that coming in once again, we had a sell-off. We were above, price was above the 50-period moving average. The market started to pull back, and we had a number of bars that closed in the top 25%, such as this one right here. Now, we would have purchased the Emini had we traded above there on the next bar, but we didn't. So we simply continue to track and watch. Now, even though we had 2 bars that closed below, our entry, if this were to take place and go higher on the next bar, would be above the 50. So this, once again, is an advanced way of trading. So on the next bar, well, guess what? We gapped up above there. Now, we realize that many traders couldn't take this trade because it gapped up too high, and at the same time, it takes a lot to hold the E-mini positions overnight. But you could also apply options to this. If you wanted to, you didn't have to actually purchase the E-mini futures. You could purchase options, or you could apply this to just saying, well, if the S&P 500 is giving me a buy signal, well, then that gives me the okay to purchase the stock I'm interested in. There's a lot of ways to use this technique. But let's just say you had purchased it. Well, you would have had a nice profit by the end of the day. You could have sold and made a quick 10, 20 points, or you could have held on for the remainder of the next week or two and made roughly about 50 points. But let's say that's a little bit too rich for your blood. All right, so let's go down to an hourly chart. Let's say you can hold positions overnight, but you don't want to hold them that long. You like to take more trades on an hourly time frame. Well, we look here. We have the 50-period moving average. We're oscillating above and below. But had we used this, we would have gone short below the 50. So this is an advanced trade for going short, but it never traded below there. So there was no trade, okay? But later on, 3 or 4 days, or I should say 3 or 4 bars later, we have another setup. Even though we're oscillating above and below the 50, we close in the very bottom 25%. In fact, I think we closed near the bottom of the bar. And if we were to enter, we would be entering below the 50-period moving average. So this is a valid setup to go short, but we must trade there on the next hourly bar, on the next 60-minute bar. And as you can see, we did. So you would have gotten short, and then look what happened. This was just, I believe, about 2 weeks ago, right before, a couple of days before the beginning of the new year. when the market had a very sharp sell-off. Now, I know a lot of you would say, well, Steve, what if I can't follow that? What if I would have missed that? That's a great setup, but boy, if I don't get in there on that bar, if I happen to be away or if I'm at work, how am I going to know how to get that? Well, don't worry. There's a lot of chances using the same technique. These are all bars that closed in the bottom 25% of their range, all bars on the next bar where you could have entered to go short. Okay. See, what I'm just sharing with you today are the 3 key elements of a trading strategy. Now, obviously, we need to know about stop placement. We need to know about where you're going to get out. We need to know about money management. How about tracking the trade if you want to stay in longer? Those are all in our courses. Unfortunately, I can't give away all of that information because it wouldn't be fair to the people who have spent good money on getting all that information in our classes. Our courses are taught in over 70 countries by beginners to hedge fund managers. And so they've paid good money, but I'm giving you roughly over half of the rules to these 3 key elements here. Now, I want to show you something that happened yesterday, okay? It was yesterday on the very close, just about an hour before the close. We see here that this is a tick bar chart. So if you can't hold positions overnight, you can still use this on any time frame. This is a 2500 tick bar chart. You can use it on any time frame. I don't care if it's a weekly bar, a monthly bar, a daily, a tick chart, a minute. It doesn't matter. But whatever time frame you're interested in, wherever you see this setup. Now, at this point right here, we were above the 50-period moving average. This was, I believe, about 11:15 Pacific time. I'm on the Pacific coast, so it was roughly about an hour or two before the market closed. Okay, so price crossed above. So once we're above, what does that tell us? It tells us the overall trend is now up. This means we are in no way going to short the market. Now, I know a lot of you would say, boy, Steve, but this was a great short right here. Boy, had I only gone short here, look at, I could have made all this money to the downside. That's true, but remember, we're trying to instill consistency in you. And if you use this simple technique, don't you think you could have had consistency using these 3 key elements to go long? Why try and bucket and maybe go for one nice winning trade when you have all these setups to go long? These were all valid setups using the 3 key elements that I shared with you today. And this was yesterday. So we're not trying to tell you that we're cherry picking the best examples that are maybe 6 months or a year old. This happened roughly in the last hour of yesterday's trading. Okay, how about the Forex trades? I know there's some Forex trades as well, Forex traders as well. Well, we can still use this with different time frames and different markets. Here's a weekly chart of the Canadian dollar. Now, this is a little more clear cut. Obviously, we're above the 50-period moving average, going all the way back a year or so. So this is telling us for this entire time, roughly about a year or so, that we should never have shorted the Canadian dollar. There's no way. The only thing we're looking at on a weekly time frame is long setups. That's it. That's the only thing we would be looking for. Now, if you wanted to use these 3 key elements, you could have had some very nice setups all the way up while the Canadian dollar was going higher. And I know it doesn't seem like a tremendous move to the upside, but these are weekly bars, and these literally represent thousands and thousands of dollars per contract that you could have made trading the Canadian dollar. At the same time, if you want to trade intrabar, the way a lot of Forex traders trade, they like to trade 4-hour charts, all right? Well, let's look at a 4-hour chart of the euro dollar. Now, looking back here, we see once again, just about a week or so, the euro dollar crossed below the 50. So on a 4-hour time frame, 240 minutes, this tells us we are in no way going to try and pick a bottom in the euro dollar. Had we tried to pick a bottom in the euro dollar, guess what would have happened? You would have had a nice loss on your hands and probably would have given up everything you made on your last couple of trades that picked tops and bottoms. Remember, there's no consistency. If you give back everything you just made, what's the consistency? So we're looking for nice setups that are in sync with the overall trend, and you think you could have found some right there using these 3 key elements I revealed to you today, okay? All right, so let's recap. First of all, we gave you 3 keys. These are 3 keys that are virtually in all of our trading strategies. We either use one or all 3. But remember, we're just sharing with you these 3 keys because we have exit strategy, we have stop placement for all of this. But as I stated, it wouldn't be fair to give that away, or I might as well just give away everything for free. And I'm sure I'd have a lot of angry students of mine wondering why they had to pay when I just gave everything for free. But I gave you 3 of the main components that make up the majority of our strategies. Once again, the first one is you must always be in sync with the trend. Now, obviously, everyone knows this, but the reason why most traders fail is because they have a different idea of what the trend should be. I know a lot of you have been taught that you look at the higher time frame to tell you what to do on the lower time frame. Now, even though that doesn't go against our philosophy, we don't teach that because we only tell our students to focus on the chart you're looking at. So therefore, if you're trading a 5-minute chart, only look at where price is in relation to the 50-period moving average on the 5-minute chart. That's it. That's that simple. Remember, we don't want to overcomplicate our trading. We want to keep it simple. If we're looking at a daily chart, we only care where price is in relation to the 50-period moving average on the daily chart. That's it, okay? Key number 2, we look for that bar pattern. What is that bar pattern? If price is above the 50-period, you want to look for a bar that closed in the top 25% of its range. If you're below, if the majority of price is below the 50, you're looking for a price bar that closed in the bottom 25% of its range. And students always ask me, why are we looking for these bars? What is so special about these bars? Well, remember, we take our signals and setups and all our directions from the market itself, not from an outside source, not from some trading guru, not from some news event, but from the market. And if a bar closes in the top or bottom 25% of its range, it's giving you a clue. In fact, it's almost screaming that it's going to continue in that direction. So what a great edge or advantage you now have, not coming from some guy in a trading room or a chat room, but coming from the market itself. It's telling you that most likely we're going to go in this direction, so you might as well come on board if you want to be in sync. So look for a bar pattern that closes either in the top or bottom 25% of its range. And then lastly, we want to put the odds in our favor even more. If we're going long and we see this bar pattern, we're not going to simply buy at the market. We have to get confirmation that we trade above that bar, all right? Anywhere from 1 to 5 ticks. If we trade below or price is below, we have to have confirmation that we trade below that. Okay, that's our entry technique, anywhere from 1 to 5 ticks. We're not going to just simply buy or sell at the market because maybe something happens and the bar reverses before going any higher or any lower. So these are 3 great elements, 3 great chart patterns or chart techniques for getting you in sync with your trading. Now, you can apply them to any strategy you currently have, or you can build your own strategy off that. Or you can become a member of Specialist Trading, and you'll see once you take our courses how these are all anywhere from 1 or 2 of them to all 3 in our strategies, okay, along with the stop placement and our exits as well as money management, okay? So we just gave you 3 fantastic things to help elevate your trading for 2015. Now, before we get to questions, I want you to ask yourself, and be honest when you ask yourself this, after what I just shared with you, do you think any one of these edges could have helped your trading this past year? All right? Think of what we just went over, the 3 key elements. Now, I know a lot of you may say, well, Steve, I don't really trade that way. I've been taught to look at news, or I've been taught to look at different types of things. Okay, I understand that. Everyone has a different path to get to where you want to be. But what if you had just applied the simple technique, which is getting you in sync with the market, say the 50-period moving average, all right? Do you think that could have helped your trading? In fact, I'm going to give you a homework assignment since this is a class. I want you to go back and look at your trades from past year, or if you have too many of those, just look at your last 20 or 30 trades and see where your trade entry was in relation to the 50-period moving average. I can almost guarantee that you were out of sync. Your losers were out of sync. In other words, this is something that you basically were out of sync with the 50-period. That's why you were losing. You were buying below the 50 and selling above the 50. So what I'm trying to say is, even if you decide not to become a member, we've just given you 3 great things here that you can use in your own trading for free at no cost, that I personally use on a daily basis. Now, what if you like this and you'd like to have maybe 3 more completely different edges that are just as powerful but totally different? Or how about 5 or maybe even 8 more edges, just as what we just shared with you? Well, here's what I want to just take a few moments before we go into question and answers and talk about a great program we have for all the members of Trading Pub here, Secrets of a Stock Exchange Specialist Training Sessions. This is a 3-hour video of an actual seminar I gave in Denver a few years ago, where a lot of people, hundreds of people came to see me speak, and I went over and spoke for 3 hours on many edges, such as you saw today, but totally different. And as well, I gave them the complete rules, stop placement, exit strategies for one of our best pullback strategies, and that's strategy number 1. In fact, let me share with you some of the recent signals on strategy number one. These were our course members who have all the rules or are privy to strategy number one were eligible to take these signals. Here's one to go long on CVS on the 15th of December and another one on the 5th that you could have had some nice gains on. And once again, we share with you numerous exit points. We share with you numerous stop placement and numerous ways to track the positions. Now, the beauty about strategy number one is it catches these really nice pullbacks, whereas the technique I shared with you today was more of a breakout type of pattern. This is more of a pullback, whereas you see we're trying to catch the sell-offs in an uptrend, as we did here, very bottom of that, and then at the very bottom, another signal was generated right here. Now, this works just as well when you're going short on a different time frame. Here's a 5-minute chart of the E-mini. As you can see here, this was just a few weeks ago, I believe. We had a little bounce on this 5-minute chart. Strategy number one generated a sell signal. It didn't really go down that much, but you would not have been stopped out. And guess what? Another sell signal was generated. Well, then that's when momentum kicked in. Another pullback generated. Now, most people would say, well, we've bottomed out. I'm going to start bottom fishing and looking for a bottom here. This is what we always stress to our students, that it's much easier to be consistent if you are in sync with the trend. So since the overall trend was down, we're looking for sell setups. And we got another setup here to go short using strategy number one. So that's on a 5-minute chart, and we can just as easily apply this to a daily chart of the Canadian dollar. These were all valid signals taken by our Forex members to go long on this daily time frame at all these pullbacks here. So you see, this is a great pullback technique. You get much better prices buying on these lows in an uptrend and selling on the highs in a downtrend. We share with you all of the complete rules: buy, entry, stop placement, exit placement, money management. Everything is included, as well as more high probability trading edges. We tell you which indicators to use, which ones not to use. I go into the definition of what I feel is the difference between systems and strategies. I share with you the number one chart pattern you should be applying in all trades. And we once again give you the complete rules, complete way to trade strategy number one of our most consistent pullback strategies. Now, this is a video course, online video course. It's yours to keep. This is not something that dissolves after a couple of weeks of viewing, or that you have to pay up again after a quarter or so. Once you let us know that you're interested, it's yours for life. Now, on our sister site, Pro Trader Strategies, they sell this for $997. But because of our affiliation with Trading Pub, we're reducing the price down to $37, okay? So that's a tremendous discount. You get, once again, 3 hours of a seminar that I taught a couple of years ago that people paid good money to come see me speak. I'm sure if we had charged only $37, we probably would have had to rent out a convention center or something, because that was so inexpensive. But once again, this is advertised on our sister site, Pro Trader Strategies. They market and promote all of my techniques and methods for close to $1,000. But because of the special webinar for the people attending, we're dropping the price down to $37. But this is for a limited time only. So if you want to take advantage of that, here's how to get involved. As you see here, we have the email address for Pro Trader Strategies. That's trading@protraderstrategies.com. As well, here's the phone number to contact us. And I believe that, let me just go one slide forward. I believe that Yana may have posted the offer there. Yes, she posted it right there, the special link. So you can just click on that link, and it will be right there for you, and you can be up and running in just a matter of moments. Once again, all this information that I just shared with you is not just for stocks, it's not just for currency pairs, it's not just for Forex traders, it's for everyone. So in other words, all of these techniques work in any market, in any time frame, and in any direction. So if you're a stock trader, but you also like to trade futures, guess what? You can use the same techniques, the same strategy in both. In fact, I just shared with you those actual trades that took place in those different markets. Doesn't matter if you like to trade tick charts or if you like to trade weekly bars. You'll see setups in all markets, all time frames, and extremely simple. So once again, I believe Yana has put up the link there for the $37 special, and I believe we have 10 or 15 more minutes left. I'm going to leave this screen up here, and if you don't mind, I'm just going to close up the pointer, and I'll go down and try to backtrack if I can answer any questions. I see Mike asks, for futures only? No, this is, once again, Mike, this can be used for anything you'd like. So if you even want to, in fact, I should have showed a slide here. We had a number of fantastic trades to go short in crude oil using strategy number 1, as well as the 3 key elements. You know, you'll see wherever you see these patterns and setups, you can apply it. It does not, you know, just fit one market or one time frame. Okay. Keith, when you say cannot use this tomorrow, no, the information, I think you misunderstood. The 3 key elements you can use tomorrow. Let's say you decide not to take advantage of $37. I would hope you have $37, but let's say you decide not to do it. Well, you can use the 3 key elements. Go ahead and use those. I mean, we just gave you 3 of the most, the basic format of our strategies, and you can actually start using, Keith, as early as tomorrow. Even if you just want to use the 50-period moving average, you can use that tomorrow. If you want to use the entry technique confirmation, it's yours free to use. Let me go back a little bit more here. Let me see here. I'm sorry, Jerry DeRose, excuse me, he said the 3 elements wouldn't be he said it wouldn't be, he's asking, I'm sorry, I couldn't understand the question. If you only gave 3 elements, otherwise it wouldn't be fair for the client who paid for more elements. That's correct. So I ask, why not? Isn't he Santa Claus for giving everything for free? No, apparently I'm not Santa Claus. That wouldn't be fair. And it wouldn't be right to the people that has spent good money. Keith asks, once again, great strategy, but without exit points. Well, we provide all of that in there. Once again, for $37, you'll get all that information, Keith. Jeff asks, how do you convert a tick when dealing with stocks? Well, it's a good question, Jeff. I think that mainly has to do with your charting software. I know, let's just take, for example, TradeStation. I mean, all you do is simply you know, go into the edit box or the format box, and you can choose which type of time frame you're interested in. You can choose tick charts, you know, and then it's up to you to experiment which time of tick charts. I would say nothing less than, you know, if you're an advanced trader, you can use anything from 250 to 1,000 tick bars. If you're more moderate, anywhere from 2,000 to say 5,000, and then after that, I would just simply trade daily bars. But this is something you can decide on tick bar charts. But if I'm answering your question correctly, it's on your charting software where you have to contact them. Okay. Let me go to some more questions here. Sam says, great stuff. Thanks, Mr. Primo. You're more than welcome, Sam. And hopefully anything I've given you for free today, you can will help elevate your trading. Rich says this system works on the 50 simple moving average. Well, yes. Well, you know, everything we share or everything we teach at Specialist Trading, we apply the 50-period simple moving average to. This is something that I didn't just give to you today and then we don't really use it. I use this in my own trading, and it, you know, today the market was moving up and down, going back and forth, and it really gets you that consistency factor when you apply the 50-period moving average. So it's a great tool, and I urge you to start using it as early as tomorrow. You know, once again, that homework assignment, go back and look at your last 10, 20 trades. I can almost guarantee that your losing trades were due to the fact that you were buying below the 50 period and you were selling above. So you'll see how consistent that tool really is. Alan, thank you. This is superb. You're more than welcome, Alan, and I hope it helps you. And remember, you're going to get probably 20 times more information in this 3-hour presentation. So really take advantage of that $37 deal. It's a great discount, down from nearly $1,000. And once again, it's yours for life. You can study at your own leisure. You can watch this tape over and over again, and you get the full, complete rules to one of our most consistent pullback strategies. That's strategy number 1. Okay. Let me scroll down a little bit more. Let's see here. Some bars follow the 3 rules and still a buy or sell signal wasn't generated. Why is that? Well, I'm not, you know, Guy, if I understand your question correctly, your statement, you're saying that on the chart examples you saw where they follow the 3 rules, but there wasn't an actual trade. I tend to disagree with you because they may have seemed very close, but remember, we have to trade 1 to 5 ticks above in order to go long, or 1 to 5 ticks below. We may have had the 2 other rules meet nicely, but oftentimes, you know, maybe you're seeing this on the other side of the 50-period moving average. So this is going to be recorded. Go back and study again and see if it really did meet all the requirements or not, okay? Let's go here. Keith says it's not confusing. No, good statement, Keith. It's not confusing at all, and we pride ourselves in that. How many people have taken classes from presenters or paid for a program, and after the first 5 minutes said to themselves, boy, I don't understand. I understand even less now than when I first started. This is very common because for some reason we've been taught that the more complicated we make our trading plan, the more validity we're going to be giving to it. And it's actually the opposite I've learned in 38 years of trading. The simpler the trading plan, the more valid it is. So thank you, Keith, for saying that. It's not confusing at all. It's all of our trading strategies are very simple, and we pride ourselves on that. Most of them have no more than 5 or 6 rules. Okay, so yes, good observation. Let's see here. Spence says, I'm sorry, I'm sure it's assumed that if you have a system with stops, exits, targets, and tradesmen, you could use these simple rules and see how it works. Yes, Spence, if you do, that's one of the things we said. If you want to apply these 3 key elements, we really feel that even if you decide not to spend the $37, you can use what I gave you for free and add it on to what you're currently trading with. And we really think it will, as you stay here, it could simply ramp up your odds for success and give you higher probabilities. Because once again, you may have had a strategy that's working or a system that's working okay. Once you apply that 50-period moving average rule, or once you apply the confirmation entry technique, well, maybe you really ramped up your odds for success even greater just by putting those simple elements, those key elements in there. So yeah, that's why we say you can use this as soon as you like. Let's see here. Ellen says or asks, so this covers entries, exits, and what? Well, Ellen, I assume you're asking about the $37 special we have. We give you, today I give you 3 key elements in today's free presentation. In the 3-hour recorded video course, I give you about 8 more elements or techniques or edges, just like I shared with you today, but they're completely different. Plus, I give you the complete rules to the strategy. We showed you some of those signals then. Strategy number 1, that's a pullback strategy. When we say complete rules, we give you where to place your entry, we tell you what to look for, we tell you where to place your stop, and we tell you where to get out. And then we show you advanced ways to trade that as well. So we go into a lot of detail so that you can be trading this and up and running very quickly. But this is all included. Now, we have members, before we offered this deal, who spent close to $1,000 for this one course alone. We're offering you the course, not only the course, but many more techniques and edges included in this for only $37. But that's for a limited time only, so I strongly suggest you take advantage of that. $37, trust me, I'm sure most of you spent that today just in commission costs alone if you're trading. And if you're going out to dinner tonight with your significant other, your spouse, trust me, you're going to spend a lot more than $37. Okay. Brad asks, can you confirm that the entry signal is only good for the next bar? Yes, that's why we call it the confirmation method, because what we're trying to do with the 3 elements techniques I shared with you today is we're trying to catch momentum. And we want to see that momentum continues on the next bar. Now, most of the time, if momentum continues on the next bar, in other words, if we trade above the previous bar's high or below the previous bar's low, we're going to continue in that direction. So we want to catch momentum. We don't just want to stick around 2 or 3 days and hope that it trades up there. Now, oftentimes you'll see that, but that's okay. We're not looking for those setups. We're looking for high probability setups. Remember, we're looking for consistency, and it's all about odds. And if we trade above there the next day, the odds are in our favor that we're most likely going to continue, just as I showed you with those examples. So that's what we're looking for, the next bar. Now remember, this next bar could be the next 5-minute bar if you're trading 5-minute charts. It could be the next monthly bar if you're trading monthly bars. It doesn't matter what time frame or what direction, only that it's the next bar. And it does not have to close there. It only has to trade there intra-bar. Okay? I hope that answers your question and clarifies it a little bit. Keith says, without stops and exits, you can get in big trouble. Sure, that's why you got to take the course, Keith, because this is what we give you in the course. Well, $37 deal, I should say. It's not even a course. It's more like a deep discounted. And that's what we give all of you, plus the advanced stops and advanced exits. Mike is asking, is this a download or mail DVD? That's a great question, Mike. This is a simple link that's sent to you. That is a link that is yours, and that you simply can click on that, get the password, and it's yours to view whenever you like. So you can watch this on your tablet. You can watch it at work if you like. You can watch it at home as often as you like, and it's yours once again for life. Okay. Let's see. Judah says, do you enter the tick above or when the next bar closes? Once again, Judah, we enter one tick above. So it just has to trade there interbar. It doesn't have to close there. Many times, let's just say the high of the bar is 50, okay? And it closed in the top 25% of its range. And we're above the 50 period. So all these three elements are in place, these two elements. The third element is we need to see it trade above that bar, the next bar. So it needs to trade at 50.01 to 50.05, okay? Now, let's say it trades there, but you're thinking that you can only buy it if it closes there. Well, what if it trades there and goes all the way up to 53 and closes at 53? Well, okay, I waited for the close, and now I guess I buy it 3 points higher than where I could have bought it. Well, that's why we don't want to miss that momentum. So it's only a requirement to buy if it trades 1 to 5 ticks above. So you don't have to wait for the close, okay? TJ asks, what is the instant access to? What's the instant access to that video? You get the 3-hour video, which is the 3-hour session of me speaking in Denver with all the techniques and then all of the strategy rules, and you get instant access. You could be up and running and watching that in just a few moments if you like. Let me see here. And thank you, Yana. Once again, has posted that you see here on the chat box. So you can just simply click that on and it will take you right to that page where you can get that $37 deal. H Badger is asking, do I buy the tape through the web address? No, it'd probably be easier, Mr. H Badger, I guess, to click on the link you see that Yana has posted, and it will take you right to that. You don't have to go to Pro Trader Strategies, and you don't have to call up anyone. You can just simply click on the link and it will take you right there, and you can just buy it online for $37, okay? Ellen is asking, are there more than 3 entry criteria in the course? I'm not sure what you mean by 3 entry criteria. The only entry criteria we gave today is the confirmation method, and that we use that in this particular course. So, so you already are well ahead of the game because you know how to apply that technique. But I'm not sure what you mean by 3 entry criteria. The 3 key elements are elements, but only one is an entry criteria. That's the last one. The other ones are just to get you in sync, and then the other one is to see that you're going to be continuing in the same direction. But we only have 1 criteria for entering, okay? Jeff says, thank you. You are more than welcome, Jeff. Bradley says, the buyer gets 3 CDs, right? No, Bradley, once again, for anyone who's thinking nothing gets shipped to you, there's no CD that has to be shipped to you. It is simply an online course. You have a link that you can click on at your leisure, and you can watch it whenever you like, okay? Jeffrey ordered a 3-hour video. You are welcome. Thank you. You are more than welcome, Jeffrey. And once again, once you become a member, whether you purchase a $2,500 product from us or a $37 product, you have access to my email address. You can contact me, Jeffrey, whenever you like. Any questions? You're going to be getting a ton of information in this 3-hour video. And if something doesn't make sense or it wasn't as clear as you thought, you can email me whenever you'd like. This goes to anyone who purchases this today. And as I stated at the very beginning of our presentation, we are an educational company. So I take pride in knowing that I get back to each and every one of my students and members and answer questions they may have. Remember, our strategies and techniques are traded in over 70 countries around the world. We have people trading them who have just started trading within the last couple of weeks, and we have hedge fund managers who trade my strategies. Everyone is able to email me and have any questions answered, and everyone gets the same rules. There's no advanced method if you've been trading for 10 years or higher, or no beginner's method if you've only been trading for a week. Everyone gets the same format, but then I work with you as your mentor to help mold it to make it more personalized for you. If you'd like to trade more aggressively, I share more techniques and tips with you so that you can trade it more aggressively. If you want to trade it more conservatively, we work with you with that as well. Okay. How long is this offer good for? TJ asking how long are we good for with the 37? You know what? I only think it's going to be for the next couple of days, TJ. So if you're running short of funds, $37, that's not a lot of money. You know, normally if someone was offering a $500 or $1,000 discount, I could understand. But for $37, you should be able to take advantage of that because that's a really deep discounted offer in the next couple of days. Okay. Mike asks, can this be ordered over the phone? Yes, it can be, Mike. If you call that number right there, if you would rather order over the phone, you can do that. Area code 310-598-6677. As I stated earlier, our sister site is Pro Trader Strategies. They market and promote all of my techniques and courses. And we have trading consultants there. They can take your order and get you up and running, okay? Let's see here. Ellen says, I have been studying Forex for years and I'm so tired that the simplicity of this really appeals to me. Well, thank you, Ellen. Once again, I'm saying this from firsthand experience. I'm not trying to talk down to anyone or tell you that you're overcomplicating. I'm saying this because this is exactly the way I traded. Trust me, my trading, I had maybe 100 indicators on my screens. I was waiting, just for every news announcement to come out. And then after they came out, trying to figure out if it was bullish or bearish. I was subscribing to every newsletter. We didn't have trading rooms back then, but we had newsletters, and I was listening to every trading guru, and guess what? I couldn't make any money. So my mentor said, Steve, the reason why is because there's no consistency in these things you've been taught. Simply scale down, keep things as simple as possible, and learn how to listen to the market. The market will just about tell you everything you need to know. There's no reason to really put the majority of emphasis on news or on fundamentals or on what's going on the other side of the world. Sure, you can take that in context, but just take it very lightly. Just the main thing is learn how to listen to the market. And I gave you 3 great tools today that you can start using as early as tomorrow to listen to the market. The 50-period moving average technique, the bar closing in the 25% of its range, and then the entry technique. They're very simple, and we're not complicating our trading at all. And there's a very high level of consistency in all of these, okay? Keith says, asks, you say 1 to 5 ticks. If you use that, you never get to 5. So is just 1 tick? Well, no, we say 1 to 5 ticks because we want you to become part of the process. We give you that range, in other words. Some members have told us in the past, they say, well, Steve, I bought it 1 tick above and then it went lower. That's okay. It's not a requirement to buy 1 tick above. You can buy it as high as you want to. If you want to buy it on the close, you can do that, but it's not something that has to be followed the exact same way every time. We want you to become a part of the process. This is why we tell all of our students to study this and then to see what fits their persona. So if you want to get in 3 ticks, that's fine. You want to get in 1 tick, great. You want to get in 5 ticks, it's really up to you. This is why we feel most traders lose, Keith, is because you are, listening to an outside source or relying on something to tell you what to do. You have to study and research on your own and then become a part of the process. That's how you get to that road to consistency. But when you try to, take your signals or rely on an outside source, that's when, your trading plan doesn't seem to work. So it's good that you notice that, you've taken the first step on becoming a part of the process. Spence says, yeah, I responded. System looks nice the way you stay with the trend. Thank you, Spence. And trust me, as I said earlier in the presentation, all of the techniques and methods I share with you are not to be 100% guaranteed that they work each and every time. We're just about putting the odds in your favor. Trading is a numbers game. No one makes money 100% of the time. What we want to do is have a 2 steps forward, 1 step back approach. And the way you do that is by using sound techniques that have stood the test of time, that have a certain level of consistency. Buying on bottoms and selling tops have no consistency to them. Either do any type of support and resistance type of techniques or any type of retracements and things of that nature, because they're too subjective. One man's support may be another trader's resistance. So we want things that are very cut and dry. And as you can see here today, everything was extremely cut and dry so that you know exactly if you should be buying, you know exactly if you should be selling, you know exactly where to get in, where not to get in. We try to make it as simple as possible. Trust me, I use these on a daily basis. So this is not something I teach and then don't apply. I use this today in my own personal trading. I think we have time for just a few more questions. I don't want to take all the time of the good people at Trading Pub. Jeff says 40 is my date night limit. Mine too. I try to keep it as simple as possible in spending money and going out for dinner as well, Jeff, so I know exactly what you're talking about. Bradley, just ordered the educational series. Thank you. You're more than welcome, Bradley. And remember, once again, all of you people who are taking advantage of that deep discounted offer, you're free to email me whenever you'd like, so don't hesitate. If something doesn't make sense or you just want a little bit more clarification, email me whenever you'd like and I'll get back to you as soon as possible, okay? Okay, time for just a few more. Boy, I'm sorry, we have so many more questions. And remember, if you do have any questions regarding the purchase, such as technical issues, such as you may say, well, I don't understand how to watch this, or where do I find this link? All you have to do is simply go to the people at Pro Trader Strategies right here. And you can email them at trading@protraderstrategies.com or call them. They handle all of the tech support and everything that has to do with any type of recordings or something that has an indicator that you should be following on your screen. Anything that has to do with actual teaching or learning how to trade the strategies, you can address directly to me, okay? Let me see here. I'll just take a few more questions. Mike is asking where we're located. We are on the West Coast, Mike. I'm on the West Coast, and our company, Pro Trader Strategies, as well. And let's see. Mike is asking for the recording. I think you would have to contact the people, Mike, at Trading Pub, and they can set you up with that. And I've seen some people asking about. Actually, I don't want to ask or answer the questions that I believe they may be asking about the $37 deal, about actually being able to watch it. I want to answer more questions that just have to do with actual trading. Okay. Let me see here. Are there any, Jennifer asks, are there any other techniques that you teach not included in this online class? Yes, Jennifer, we have, I have upwards of 10 specific strategies for trading virtually all the markets. In fact, we have a course that teaches upwards of 10 techniques for stocks, the same thing for E-mini futures, and the same thing for the Forex markets. Now, these are our grand programs. You can purchase these, but these are very expensive, and I don't want to, start off our affiliation with Trading Pub by offering you, a course that runs anywhere from $2,500 to $5,000. The good news is that our courses start as low as roughly $400 and work up to that. So you can take individual courses. I would contact the people at Pro Trader Strategies, and they can really help you with that. Okay, so the $37 deal is a great place to start out. Trust me, it's a $37 discount. That's a great place to start out. But I would most likely start there and then work your way up to actual other strategies. And once again, we're throwing in roughly $400 or $500 strategy in this $37 deal. That's strategy number one. So you're getting really a lot. Mike asks, is there a stop option course? This will be my last question for today. No, we don't have an option course, but many of our traders are sole option traders. They just trade options, and what they do is they'll have a couple of strategies. And when the strategy generates a signal, such as the other day, we had a signal to go short the E-mini. Now we realize that it takes a lot of money many times to hold positions in E-mini overnight. So all they did was they bought the puts. And so they will take the signal and just transfer it over onto the option market. Same thing with stocks. If you see a signal generated to go long or short a stock, rather than purchase it, you simply purchase the option. But we don't have actual courses where we have option strategies, such as spreads and things of that nature, okay? Okay, in closing, I just want to thank you all for taking the time out, and thank you all for all the people that did take advantage of that $37 deal. I know it will really help in elevating your trading, not only the many more numerous techniques that I explain in there, but also the strategy itself. Please remember, if you have any questions concerning the strategy, contact me. Anything concerning trading, If you have any technical issue questions, anything concerning not being able to view the actual program, or you didn't get the right link, contact the people at ProTrader Strategies. Once again, here's their email address, trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. I want to thank, first of all the good people at Trading Pub. Raleigh and Yana, thank you so much for your help in helping me put together this presentation and for giving me the opportunity to speak. And lastly, I want to thank all of you for attending today. Thank you so much for listening to my presentation, and I really hope that even if you don't take advantage of that $37 deal, you can use the 3 key elements we shared with you today, and hopefully they'll elevate your trading. I really sincerely feel that they will. So thank you so much, and I look forward to all seeing you next time, okay? Thank you. We'll see you. Bye-bye.